No.
Philomena, I'll just be back in a second. Just a second.
Yeah, sure. So welcome to the 14th session of the economics refresher course. And
I just wanted to know, today we are having
yeah,
a 1.5 class or two sessions or one session today?
we are having one session today.
Okay, fine. And tomorrow we'll have two sessions, right?
Yes, in the daytime.
Yeah. So can we split the two sessions, like give it like an hour gap or an hour and a half or 1 hour
Yes,
gap
yeah,
sessions?
we can have 1 hour gap in between sessions, and we
Yeah.
can
Okay.
go on to two sessions in the daytime.
Yeah. And can we do one around like 3 and one around 5 or one around 4:30? 3
Yes,
to
yes,
3:40 and then 4:30 to 5:10.
sure. So we will have the 15th and the 16th session from 3 to 3:40 and from 4:40 to
Okay.
5:20.
Yeah.
And we have stopped with measures of measuring national income.
Yeah. Can we just go through this one more time?
Yeah. So there are three methods of measuring national income. The first method, as we viewed on the screen of the PowerPoint slideshow, there is the
Hmm.
value added method.
Hmm.
So the value added method is also known as the production method or output method. Its primary objective is to calculate national income by taking the value added to a product during the various stages of production into account. Therefore, the formula for calculating the national income by the value added method can be expressed as estimated by adding the value added by all the firms, where value added is equal to value of output minus value of non-factor inputs. This gives GDP at market price because it includes depreciation and taxes. Reach national income, that is NNP at fixed cost, we need to add national net factor income from abroad uh, minus depreciation, and we have to subtract net indirect taxes as well.
Add to reach national income, NNP at FC.
Yeah,
What does the NNP stand for?
it's net
Net
national
national product.
product at
Okay.
fixed cost.
At fixed cost. It's fixed cost or factor cost?
Yeah, it's factor cost. That's right.
So to get that, we add net factor income from abroad,
And we
GNP, gross
subtract
national
depreciation.
product, NMB, plus net income from abroad and
Yes.
subtract depreciation.
So depreciation is mainly the
One second.
reduction in the value of an
One,
asset.
I'll just get a pen or I'll just
Yeah.
note it down here. I'll
So this,
no. Just I need help with the full forms. What stands for what I need. That's all.
so
Uh,
national
NNP,
income, yeah, NNP is net national product at factor cost.
net national product, and GNP is gross national product.
Yes.
Product
At
and
market price.
but won't it be given in the question?
It will be given, but if we know the full forms, it's good to know. Like GNP is gross national product, and GDP is gross domestic product.
And
And
how do you get these are the formulas, is it? How
yeah,
does
these
it?
are the formulas. So we just
So in the
need to
question,
remember the full formula. We'll just ease it a bit
just
because
I'll
the
open the
formula in the
numerical.
yeah
I'll open the numericals in the chat in my textbook. Yeah. Yeah. So from the data given below, estimate the compensation of employees. From the
yeah.
following data related to the firm, estimate the compensation of employees again. Yeah. So what are the formulas for this? And these are net indirect taxes charged, right? That have been charged or we
Yes.
have paid.
So GDP at market price, which is the value added, plus net factor income from abroad minus depreciation and again minus net indirect taxes is equal to
Add
the
net
value added
factor
method.
income from abroad.
Yes,
Okay.
NFIA is net factor income from abroad.
Also, see in my notebook,
Yeah.
in my notebook,
Yeah.
I have written NDP at FC equals sorry, NNP at FC, net national product at factor cost equals
Okay.
net domestic product at factor cost minus net factor income from abroad.
Is it the value added method?
It doesn't say so and expenditure method. No, this is income method. This says it's
Okay.
income. So so what you are showing now, that is a different method, is it?
Yeah, it's a value added method. Income method is
Oh,
different from value added method.
okay.
So just keep this formula in writing.
Okay. Just a second. I'll type it out. That's okay.
Yeah, that's fine.
Yeah. What is it? Which one?
The
Net
value added
factor.
method. Yeah. So we just need to add the GDP, which is the gross domestic product at market price. We need to add net factor income from abroad. And we need to subtract depreciation.
So gross national product at market price is nothing but the net factor income from abroad, right?
Yes.
Or it is Pakka or
Because it adds GDP at market price also. So it has two components. It has GDP at market price and net factor income from abroad, which is the gross national product at market price.
Okay, so GNP at NP.
Yeah.
GNP at MP equals G.
It includes
GDP at MP plus NFIA. NNP at MP equals. So I've written GNP at NP.
yeah.
Gross national product at market price equals gross domestic product at market price plus net factor income from abroad. And
Yeah.
national product at market price is equal to gross national product at market price minus depreciation.
Yes.
And NNP at FC, net national product at factor
At
cost
factor
is
cost. So
equals
net
to net
national
national
product at
product at
factor
market price
cost.
minus
Yeah.
net income tax.
Yeah.
NIT is net income tax, right?
Yes. It's the net indirect tax.
Net indirect tax, okay.
Yeah. So we just have to go through the definitions here. So there are two more methods called the income method and the expenditure method as well.
Okay.
So expenditure method is based on the expenditure taking place in the economy. The expenditures that happen in the economy can be by individuals, households, business enterprises, and the government. Therefore, the formula for calculating the net national income by the expenditure method can be expressed as national income, which is equal to C plus G plus I plus X minus M.
X
Where
minus M is net export or net import. Net export.
yes, net exports.
And C is
C is the consumption.
consumption. G is
Yeah. Government expenditure.
okay.
And I is the investment.
Investment, yeah.
So is it similar to the aggregate demand formula, which we learned in the previous chapter?
I'll have to brush up, Tamiyan, I think. I'm sorry.
X minus M is equal to
Net exports.
net exports, where X is equal to exports and I is equal to imports. So this formula is very similar to the aggregate demand formula, which is even that says AG is equal to AD is equal to C plus G plus I plus net X. So we can say that it is similar to the aggregate demand, and therefore the expenditure method of national income is the same as the aggregate demand. So just the expenditure which is done by the individuals, households, business enterprise, and the government. So consumption can be by individuals or households.
Expenditures
And
taking place, expenditures that happen in an economy can be done by individuals, households, business enterprises, and the government. Yeah, that's what the formula.
are we clear with the expenditure method?
Yeah. National income. NX is what? Sorry, NX is net
Net
export.
yeah, net exports. We
Net
just
exports.
name
That is again X minus M, right? Can you go back to the previous
yeah.
slide one second? Yeah. Oh, okay, okay, fine, got it.
So we finished covering two methods. First is the value added method and the expenditure method.
Can we go
Next
back to
is
value added method once?
yeah, just cancel this off.
Yeah. So these the last 3 points are the three formulas, right? GNP, gross national product at market price, equals gross domestic product at market price plus net factor income from abroad. Subtract so net national product at market price equals gross national product at minus price at market price
minus depreciation. And we have to find the
net
we have to
national product
subtract net indirect taxes as well.
So you find the previous one minus is equal to net national product at market price minus net indirect taxes. Got it.
Yes. So we just have to keep this in mind. So we just need to add the net factor income from abroad, which is the income from residents living abroad, and we need to subtract depreciation of the input for the production, and also we need to subtract net indirect taxes, because indirect taxes are paid by the citizens of the country. Therefore, it is need to subtract it. And while coming back to the expenditure method, it's simple. So you just
Yeah,
need
national
to
consumption plus
yes,
government expenditure plus investment plus net exports.
yeah. And income method is the third method to calculate national income. It is based on the income generated by the individuals by providing services to other people in the country, either individually or by using assets at their disposal.
Once again, it is based on the income generated by individuals by providing services to other people in the country, either individually or by using the asset at their disposal. The income method takes the income generated from land capital in the form of rent, interest, wages, okay, and profit into consideration. The national income by income method is calculated by adding up the wages, interest earned on capital, profit earned, rent obtained from land, and income generated by self-employed people in an economy. It is known as net domestic product at factor cost, NDP at FC. In addition of the net factor income from abroad to the net domestic product at factor cost gives the national income. It can be expressed. Okay, so it is a NNP. So NNP is equal to NDP at FC plus net factor NFIA.
Yeah.
So
it's just
once again,
yeah.
okay, yeah, fine, got it. Yeah, I understood.
So
Net
income
national.
can be rent, it can be interest,
Yeah,
it can
I
be
got it.
salary, it can be wages and profit, which can be generated from land, capital, labor as well. And they are all added in the national income method, and it's known as net domestic product at factor cost or NDP. The addition of the net factor income from abroad to the net domestic product at factor cost gives the national income. So it can be expressed in a formula as NNP is equal to NDP fixed cost plus net factor income from abroad.
So this is NNP at A, right? Because NNP at FC would be this NDP at FC plus net NFIA minus NIT.
Do we have to minus anything? No.
No, not now, but this will
Yes.
be NNP at what? Market price. No, this is not
Yes.
NNP at FC, or this is just NNP.
This is just NNP. It is
So
just
what?
the net national
So what's the
product.
difference in NNP, and NNP at MP?
Net national product at factor cost is equal to the national income. So net national product of any economy is the gross national product after subtracting the loss due to depreciation. So is this
Yeah,
NNP at
this is
factor
what.
cost?
Yeah. So why are we not subtracting the tax?
We are
Net indirect tax.
subtracting taxes only in market price or in the value added method. We are not
Okay.
doing it in the income method.
Good.
And in the expenditure method, we add all the expenditures. The income method, we add the expenditures. And in the value added method, we just subtract the depreciation and the indirect taxes. And we add the net factor income from abroad. So we have
Good.
come to the end of the national income chapter. So any doubts in the presentation we have gone by?
No,
We
this
yeah,
no, I have this one I have actually understood pretty well.
okay.
Just send me this one because I think these will help me in remembering the formulas. I'll
Yeah,
write them down once again, like in written. I will write them
yes.
down.
So
I also
last,
need
yeah.
one
So yeah,
suggestion. Can you just send me a email or a WhatsApp message with a list of all
okay,
the most important graphs that I have to learn, like graphs which will most probably almost definitely come.
okay. That will be done.
Yeah.
Last week this presentation had been sent, but there's a slight change in the value added method.
Okay.
So these
I
points
have
have been
not looked
added.
into it
Yeah,
actually because I was studying for the other subjects. I have
yes,
not
yes.
actually
If
looked into those yet. I don't think I've even opened them. Okay. So there's a
that's
change.
fine. So there's a change in the value added method because the previous presentation, which was sent during the end of the last session,
Hmm.
it said that the value added method is equal to net factor or the NDP at fixed cost plus net factor income from abroad, right?
Yeah.
Which is the same as income method. So there's a slight change here.
Okay, then you can just share this one, na? So you can share it on
Yes,
WhatsApp to
this
me.
presentation will be shared.
Yeah. And Tamyan, how do
Yeah.
you calculate this? Uh, what do you call that? Compensation of employees.
Okay.
So anything that this guy, what do you, the person, the employee receives for work done is compensation for.
Yes.
Okay. And I wanted to know, so yeah, like in your opinion, from everything we did,
Yeah.
what is like very important graph wise? Law of demand.
In microeconomics, definitely the law of demand and the law of supply is very important as well.
So one second. Law of supply is
Yeah.
an upward moving curve, right? Or no, it is a downward sloping, sorry. Or no,
The law of
law of
demand
supply
says is
shift.
yeah, law of demand is downward sloping curve.
Downward sloping.
Yeah. While the law of supply is upward sloping positive.
Upward sloping, right?
Yeah.
Because because decrease in price, increase in demand, that is downward sloping, and increase
Yes.
in price, increase in supply, that is upward sloping. And the movement of the line of the curve,
Yeah.
the movement of the demand curve, what does that suggest? The
Is it a
movement of the demand curve?
contraction in the demand?
No,
Contraction and
contraction.
expansion.
Yeah, contraction in the demand curve says that the price has increased and the quantity demanded has decreased. And
Yes.
expansion is price has decreased and quantity demanded has increased.
Increases. Yes.
And when does it move from left to right?
Mm, do we,
Shift in the demand curve,
it's
basically.
called a shift in the demand curve. Yes. So when there is a increase in
For,
quantity,
for unrelated with an increase in price, is it?
yeah,
Like luxury.
yes.
1 second. Yeah. When the quantity Q is demanded at the same. Yeah, so they've found the shift of the demand. Reasons for the increase demand of commoditized income increases. Okay. So the quantity demanded increases with the
Increase in income.
increase
Yes.
income, is it? Okay. Price of substitute goods rises. So if the price of the substitute good rises, why
Yes.
will the okay? Yeah, got it. Price of complementary goods fall, taste and preference. So the shift of the demand curve is more related to income, while the contraction and expansion is more related to price, is it?
Yes. I'll just be sending the
Yeah.
presentation
How did
of
that interview work out? That demo class.
yes.
Demo class in Japan.
That's not started yet. They have not given a timeline still. So we are yet to hear back from them.
Hmm.
So this is the attachment. Attachment.
So
So this
tomorrow,
is the
what will
last
we?
presentation.
Yeah. Tomorrow, what will we be doing?
So tomorrow we will revise with all the chapters we have gone through earlier in the sessions. So we have around 11 presentations which we have done from beginning,
Yeah.
which is the budget line.
So
Yeah.
I will study market mechanism,
Okay.
law of returns,
Okay.
cost and revenue analysis. I'll study these three for tomorrow. And like we'll
So
revise again.
yeah,
I
was
want
the law
to,
of demand and was the elastic demand and elastic supply clear as well? Because we
yeah.
didn't
That was
solve it.
those haven't done in class, but those are very clear to me.
Okay. Because we didn't take any session for the
Yeah.
elasticity of supply and elasticity of demand.
Yeah. Yeah, because I felt like I still feel like we don't need it because I'm comfortable with that.
Sure, sure. So
Uh, so for chapters 8, cost and revenue analysis,
yeah,
uh, you have combined the PDFs for some, right? The power presentation for like what are two different chapters in my book. You have combined those, right? In one
uh,
PowerPoint.
according to the Baiju syllabus which is sent, So we've made the presentations according to the syllabus, which is separated. Maybe I've not looked on the ISC Economics Class 12 textbook.
Yeah.
Maybe it's
Got it.
combined because of that reason. But there were 6 chapters in the Byju's syllabus, which is starting with demand, and the second was elasticity of demand and supply. Later, it went on to forms of market, and then we finished the microeconomics theory, and the second chapter was the theory of income and employment. The third
Theory
chapter
of
was
income.
the
Theory of income and employment is a part of which chapter, Tamyana? Oh, that is the 12th chapter. That's his chapter by itself. Yeah. Produce. So in producers equilibrium, there's only one, I think. There's only one graph, right?
yes,
There's only one graph, right? In producers
yes,
equilibrium.
for producers equilibrium. So was
And
the
for
theory of
market mechanism,
income?
there are so many graphs.
So this is
Yeah,
the second
Tamyana,
chapter. Yeah.
tomorrow, can we do this graph once more from this is from this one, laws of returns. Can you see this?
Yeah, this is the 3 stages of the laws of returns. First 3.
And can you just show tomorrow I will sit with my book, my notebook,
Okay.
and can you show me how to plot the graph as well?
Yes, definitely.
Because this graph I'll need little help in
So we
plotting
went
because
through the theory, the stages, the law of proportion in the microeconomics concept or the theory of employment and income.
or the theory of
So did we go through the law of 3 stages of variable proportion or the returns to scale in the theory of income and employment chapter?
we have gone through it, but think we'll have to do some brushing up on it.
Okay. So we did draw a couple of graphs, right, in between.
Yeah. Ex ante and ex post demand is in which chapter? 7th, right?
It's in the
Laws
theory
of
of income and employment.
okay.
Is it so?
Okay.
Yeah, it's in theory of income and employment, which is ex ante demand and ex post demand.
Got it.
So we'll start with the producers, the law of demand and elasticity of demand as well. And tomorrow we will also solve the graph for law of variable proportions. The 3 stages. First is the increasing stage, second is the constant returns to scale, and third is the decreasing returns, right?
Yeah.
So we
That
just
what is
need to
that
be clear
graph
with
called? Law
yeah,
of variable
proportions.
proportion.
Yeah, it was in production and production function, right?
No, returns to a factor and returns to a scale.
Yeah. Yeah, it was in the was it a microeconomic or a macroeconomic concept?
Which one?
This production and production function.
This was
Probably it was,
microeconomics.
yeah, it's a microeconomic concept. So this is the last concept in the microeconomics theory.
But okay, fine. Fine.
So this is the
So
stage
yeah,
one, stage two, yeah, and stage
yeah.
three.
So this one, this
Yeah,
graph, basically this graph is the whole chapter, right? So if you
yeah,
get this, you got the whole chapter, correct?
yes. Was it the same? This was the same graph in the notebook, right?
Yeah, it's a little different in my notebook, but more or
Okay.
less same.
This is the explanation of the stages of the law of variable proportions. It's similar to the constant returns to scale. In ICSE, it's been mentioned as the constant returns to scale. So it was economics confusing in these 14 sessions which we went through, or is
No,
it
it wasn't. No, it's a
there's a
little clear,
logical
but
explanation?
yeah, I have felt, but I felt like I'll have to put in little more effort. Like I have, I think 5 days left now.
Yeah,
Sunday, Monday, Tuesday, Wednesday, Thursday. That's 5 days. So in these 5 days, if I feel if I can like really sit to it,
yeah,
I'm pretty sure I can completely get it. So my goal is by Wednesday, I want to finish everything
okay,
by my whole revision. On Thursday, I want to do a sample paper, and I'll submit that paper to you as well as my economics class teacher from school, and then you all can evaluate and tell me how much I've gotten and
sure.
where I need to. That's fine, right?
Yeah, we can go through the sample question papers as well. You can solve
Yeah,
it and you can send it across. That will be
yeah.
evaluated because what we have learned can be reprised in the notes, and
Hmm.
we just have to follow the basic concepts and basic understanding. And
Hmm.
macroeconomics is more general knowledge
Hmm.
because it's on a day-to-day basis we deal with macroeconomics. We
Hmm.
If you've gone through the newspapers, we find a lot of macroeconomic concepts have been mentioned.
Okay. Uh,
So we will start with the production of raw variable proportions in the next session. So
okay.
we can end the session for today. And any doubts you can let me know.
Yeah.
And in the next few days, we will make it exam friendly session.
Yeah.
We will concentrate on the exam and get done with it. So thank you.
Yeah. Good. Thank you.